by 2030, you could have $500 silver because the monetary system is going to be changing, and people are not going to accept fiat Federal Reserve notes in the form that they're in at this point. So essentially, you're going to have silver have an exponential price rise.
Hey guys, Sean from SGT Report here. Hey, that soundbite you just heard was from James Anderson, my buddy over at sdbullion.com, and that's not a pie-in-the-sky prediction. We really back it up with quantifiable information in this video. I really believe if you only listen to one silver interview this year, it should be this one. We quantify that number, and if you listen to this whole conversation, and if you listen to this entire interview, I really think you're going to end up a big silver bug, just like investment genius Scott Minerd. Before we begin, friends, just a quick word from this interview's sponsor. Collagen strengthens nails, hair, teeth, and even gut health. Collagen maintains muscles, improves joints, and does much more. But did you know to reap the maximum benefits you have to consume 5 different types of collagen? There's actually 28 different types of collagen, but only 5 are the most important for you to remain healthy. 1 scoop of ageless multi-collagen has the scientifically correct proportions of all 5 proteins you need to maximize your benefits from collagen. There's 10 grams of protein per serving. It's odorless and tasteless, so you can add it to the drink of your choice. No artificial colors, flavors, preservatives, or sweeteners. So get yourself a bag of ageless multi-collagen. I highly recommend it. And as an added bonus, if you order today, they'll give you free shipping, free VIP live health and fitness coaching for life, and a free report on the 14 foods for amazing skin. You'll also be feeding a hungry child. For every order of ageless multi-collagen today, they'll donate a nutritious meal to a hungry child in your honor. If you order today, you can save up to 51% off ageless multi-collagen. And rest assured knowing the company offers a 60-day money-back guarantee, even on empty bags. So go to healthwithsgt.com and order today. I'll leave that link below. And welcome back, friends. Thank you so very much for tuning in. Guys, if you're a silver stacker, if you're a gold bull, if you care at all about precious metals and real money, this is the interview of the year. You're not going to want to miss a minute of this because my good friend James Anderson from SD Bullion has been hitting the cover off the ball. You need to go subscribe to SD Bullion on YouTube to get his updates. James, welcome. How are you, man?
Very good, Sean. Thanks for having me on. It's a pleasure.
Thanks for coming on. How often do you do your updates? A couple a week, it seems.
When especially during March and April when things were going crazy in the financial markets, I was doing about two times a week. But I feel like in order to do this well and to have like a long-term marathon run of this, because this is going to go for years, I think, coming up, I've been doing it once a week, kind of curating what I believe is the most important information this past week, and then as well trying to educate newbies who come along and subscribe. I mean, we try not to talk over everybody's head, but it happens when you first start out on this because it's sometimes some of the content's a little bit higher level, but if you stick with it, you tend to learn stuff, I think.
Yeah, and I guess the point I want to make for people right now real quick is we're going to walk through some history here, guys, to bring ourselves up to speed on what's currently going on in the precious metals markets. Now, silver on March 18th, guys, remember when it was slammed down with the entire slam down of the Dow and the NASDAQ on the back of the COVID hoax? Silver fell to $11.94. Today, July 15th, as James and I are having this conversation, silver is at $19.46. So it's fast approaching a double, 100% increase from that March 18th low. And this is just the beginning, guys, because JP Morgan, which the U.S. government has called, at least their precious metals trading desk, a criminal enterprise, is in the process of being forced, that's my view, James, of having to unwind their massive silver manipulation schemes. We'll get there in a second. First, let me just say, too, guys, SD Bullion has been a longtime supporter of SGTReport.com. I love these guys. It's where I buy my precious metals. And you can click the banner at the top of SGT Report if you want to go there and get the best possible deal on precious metals. James, let me just ask you this. I wanted to start with this national coin shortage. In the face of precious metals, which are already hard to get, which are already rare, now they're making our coins, our quarters, our worthless dimes and nickels and pennies. Now they're saying we have a coin shortage. Boy, I think this is just another scheme to try to move us into digital currency. But just real briefly, your thoughts on this national coin shortage. Talk about an engineered farce.
Yeah, it's quite amazing. I It reminds me a lot of Argentina. And in Argentina, if your listeners know, they've had a lot of currency crisis over the last 2 decades there. And there's been time frames of years going on where they had shortages of cupro nickel coinage in that country because the melt value of the coins on the black market became much higher than the face value. And so coins were being literally melted down and used in industrial use versus actually, circulating like they should. Right now, the nickel in the United States is right near 5 cents, and it won't be but a matter of very soon, I imagine, where it's going to be double that. And you're going to start seeing nickels, even though the law may say don't melt nickels, people are going to do it on the side. And that's, it comes part and parcel, I think, with the trend to push toward cashless and all that stuff, and the Fed coin that they're probably going to MMT out of nowhere coming years. I mean, it's all kind of headed that way, it seems.
You just sparked a memory. I think that, maybe you recall this, I think Kyle Bass bought $1 million in physical nickels maybe 5-10 years ago because he saw what was coming.
Yeah, I actually tweeted about that like a month or two ago, just laughing, thinking about that, because he made headlines. They said he had like, I don't know, $5 million worth of nickels at Brinks in Dallas, because at that time, the melt value, 2011, there was a lot of boom in commodity prices, and nickel was pretty high. I think the melt value for nickels back then was like 7.5, 8 cents per nickel. And my expectation is that for this next commodity, when this next commodity melt up really gets going, and the fiat US dollar fiat Federal Reserve note actually starts really losing tremendous value, you're going to start seeing double and triple the face value on that nickel.
Yeah. And copper pennies, there's still a lot of copper pennies in circulation. I think anything 1980 or prior is a copper penny, maybe 1981, and they're way more valuable than the zinc pennies. So
this is just a reminder, like when you travel and you go to third world countries, like sometimes you get the currency or the coinage and it literally feels like plastic. It's that cheap sometimes. That's how bad this can go. So we're headed that route, it seems.
All right, so let's take a brief walk down memory lane. Do you remember the soundbite from Jeff Christian that really blew this thing wide open back in, what was it, 2008 or 9, right back in there? And Jeff Christian admitted in an interview, maybe it was with the CFTC, that gold and silver are commodities, they're financial assets that are traded many multiples of the physical, 100 to 1.
And people will say, well, and you've heard it today, there's not that much physical metal out there. There isn't. But in the physical market, as the market uses that term, there is much more metal than that. There's 100 times what there is.
And I think he was referring to basically the COMEX. So we're going to talk about the COMEX schemes in a second. But do you recall Jeff Christian admitting that?
Yeah, that was during a CFTC hearing, I believe, in the year 2010, where he... there's a couple of funny instances from that. You can still find it on YouTube. The one where he stood up and the light turned off and he said that the light doesn't recognize his actions as being human, which was kind of ironic. And then he went on and said something about the leverage involved in the gold and silver market being 100 to 1 as if it was passé, not important. He discussed how, the London market uses the COMEX market to hedge, and that's why there's so many shorts with banks, et cetera, because they're doing other trades elsewhere. And it's a whole bunch of non-transparency and obfuscation when it comes to gold and silver markets. That's just what we deal with every day trying to study these markets. And his admission, the high leverage involved. Gold and silver, even with refiners and jewelers and miners, et cetera, we should have no more leverage than, say, 10 to 1, derivatives to physical. And here we are 10 times that or more. And especially in silver, it's even higher when you start taking into account local London trading and all the notional that goes along over there. So it's a big, weird market. Imagine an upside down pyramid where the very, very peak of it is just a small little tip of it is bullion, and then the rest is just this derivative complex. And we've been operating that way for, increasingly for 5 decades, really, in the full fiat currency era. And if that will start reversing. It does at time, now and again, when you start seeing the spot price rise exponentially, that's probably reversing. People are going for the physical and not the derivatives, and that's what we expect to come.
Yeah. Guys, and the reason I mention Jeff Christian is because he's often cited by the mainstream media as the go-to expert regarding precious metals, and he's the founder of CPM Group. And CPM Group is to truth about precious metals what CNN is to truth about news. All right, so that's sort of my view on CPM Group and Jeff Christian. However, you did interview him not long ago, and I was surprised by something he said. We'll get to that in a minute. First, James, can you explain to people what is a COMEX silver stopped contract?
So the COMEX has futures markets in various things, and they make markets in futures contracts for gold and futures contracts for silver. The futures contract for silver represents 5,000 ounces of silver underlying, and underneath the COMEX silver contract, the whole volume that's being traded every month, there are warehouses with various warehouse banks and financial institutions that supposedly have silver, although I've yet to see any real audits of this stuff, so sometimes it's questionable as to exactly how much they have. I think currently the COMEX claims to have over 350 million ounces of silver, which sounds like a lot, but to be honest, 350 million ounces of silver, that's like a third of 1 year's silver supply for the world. India at one time took 250 million ounces of silver in 1 year alone. So that could get drained very quickly if things go wrong. A silver contract on COMEX is essentially a derivative that represents 5,000 ounces underlying. Vast majority of them are settled in fiat Fed notes, and or if they are exchanged for physical, meaning metals are swapped, and 5,000 ounces goes from, say, JP Morgan off to another trader, say a hedge fund, etc. A lot of times those ounces typically stay in the COMEX so that trader can use them later on for another trade. Sometimes, though, they start getting withdrawn, and when they start getting withdrawn, that something's up. That means more than likely that there's huge demand on the physical side outside in both industry and increasingly now in store of value demand, meaning people are buying it for a long-term savings. And that's my contention. I think we saw a massive drain in the 1990s on COMEX in the warehouses. That's when Warren Buffett, his Berkshire Hathaway, they went out and took 129.7 million ounces out of the COMEX warehouses in mid to late 1990s. And my expectation is we're going to see something similar to that. I don't know necessarily if it's going to be Warren Buffett and his pals, but there's a lot of billionaires, a lot more now than there were in the 1990s. There's a lot of 50 millionaires and up, high net worth people. I think in the United States, there's over 80,000 high net worth estates with over $50 million per estate. So, it just takes a smattering of these types of people to really go long physical silver, and you start seeing some serious withdrawals from the COMEX. So, the bottom line is the COMEX is very difficult to pull the 5,000 ounces out. It's kind of antiquated and old, and it's a process that most people don't go through, but sometimes they do when the demand starts really getting high. And my expectation is that's what's going to happen. You're going to start seeing a drain probably out of the COMEX warehouses this decade.
Okay. So do you know kind of roughly right now how much physical silver is mined out of the Earth's crust annually, roughly?
So annual silver supply, like when you're talking about new line silver supply, it's about 800 million ounces, but it's been trending downward in the last few years. And this year it'll go down a pretty good amount because of the stoppage because of COVID. I think Peru and Mexico, number 1 and 2, they kind of battle back and forth who's number 1 or 2, but they both stopped for a good month or two, and so there's going to be a good hit on new line silver coming in. And in terms of people buying silver bullion right now, there's really no secondary product other than maybe 90% silver coins. The brand new bullion products people are buying, they're all freshly struck. No one who has those bullion products is typically selling them at these prices.
Okay, so 800 million ounces per year are mined. That's physical silver. Jeff Christian back in 2010 said, hey, this thing is just a financial asset, and we just traded 100 to 1 the underlying physical, like that's no big deal. I think it may be even worse than 100 to 1. So let's focus on the COMEX and help people understand how much paper silver is traded. I've heard Bix Weir, he does great updates, say that today on the COMEX they traded 600 million ounces of paper silver, almost the entire annual supply in one day. Is that accurate? Does that actually happen day in, day out sometimes?
Yeah, it does, especially pre-COVID, because the volume was much higher. I think the volume's almost been cut in half given what occurred in the financial markets. But pre-COVID, I do believe there were days where volume was traded, where essentially the contracts represented underlying the entire amount of annual silver that gets pulled from the ground in one day. that's how fast it can happen. That's the volume that's going on. It's just the illusion of what we're making a market in. I mean, it makes no sense other than people just wild speculation and such like that. It doesn't make sense in terms of the physical reality of the world. It's not like people are sitting around hedging that much silver. It's people just betting back and forth.
Well, let's flush that out, and I might be asking you to speculate, but when you say people betting, do we really mean the big criminal banks? Because most mom and pops aren't taking these gigantic positions. And we can talk about JP Morgan's positions on the COMEX, which I think exceed almost by double what the CFTC has said that they allow, maximum position.
Yeah. In two ways, Sean, you're right. And just recently, JP Morgan, in the stop contracts that have happened recently, like record size stop contracts. The last time we had stop contracts this large was when Warren Buffett and Berkshire Hathaway were withdrawing huge record amounts of silver. So JP Morgan, I think, was up to 6,000 contracts recently. I mean, at the time, it was about half of the stop contracts. So, they're making a market in about half of the entire trade of stop contracts. And then they're also over 50% of the underlying silver that fractionally backs the entire COMEX price discovery mechanism. So it's ridiculous. They're essentially the silver gorilla. They can make the price go whichever way they choose. Essentially, they can make it drop and they can make it rise based on whichever way they want to go.
Okay, and we need to recall though that J.P. Morgan Chase Metals desk has been charged with being a criminal enterprise for rigging metals prices. So let's all keep that in mind, and James, you can comment on that or we'll come back to it. But I want people to understand that the COMEX, as it pertains to gold, is running low on physical gold to the extent that at least during the COVID crisis, they were trying to fill the demand with gold from the LBMA. Guys, this is a run on precious metals in physical form. Now, what I'm really wondering, James, is as it pertains to silver in these gargantuan, unimaginable silver positions of paper silver positions, 600 million paper ounces a day. Do you think the numbers have gotten that high because this thing is spun out of control? I'm not an expert on COMEX silver stopped contracts, but do those gargantuan numbers suggest that the manipulation of the price is so difficult now that they need to deal in these incredibly high numbers? I just don't understand why they would engage in numbers that high, 600 million ounces a day.
So when you look at the COMEX in general, most of the shorts, the people who are betting for the price to go lower are typically commercial banks. And commercial banks, the way that they're apologized for this is that they're typically market makers for miners and bullion trades that are happening for ETFs, et cetera. So there's a whole bunch of apologies that are made for commercial banks being massively net short, especially in silver. But look, if you go and look at the CME groups, what they're doing, and since 2013, they've had this program called the Central Bank Incentive Program, and it's still ongoing. And when you go and look at what it is it invites foreign central banks to come into our commodity markets in the United States, where we make markets for gold, silver, platinum, palladium, FX trades, for various derivatives that are very important in terms of discovering what the price of something in reality will be. And since 2013, they've had this program called the Central Bank Incentive Program, where foreign central banks are allowed to come in using proxy desks if they so choose. So they could use, say, JP Morgan to run trades as they'd like. And so they're basically able to come in and move markets as they'd like. And the only people who are supposed to be policing this are the CME Group and the CFTC, which have proven themselves both to be, essentially darlings of the governments and the central banks. They're not going to stand in the way of whatever their policies are. So if my thesis essentially is that since 2013, we've been operating in a suppressed market where prices are allowed to go up, but they have to stay in check. They're not going to allow the prices to really start melting up until it's time to burn this monetary system to the ground, and all the promises that are never going to get paid on, at least at the amount of unfunded liabilities we have and the amount of liabilities the United States has. We can't pay these unless somehow someone gets some type of invention where we create free energy out of nothing, or we create a time machine or something like that. I mean, it's just not only going to happen. And so the way that you nominally pay it is then you have to really debase the currency. And my guess is that at some point the CBIP, the Central Bank Incentive Program, is coming off, and you're going to see the precious metals run first, and then commodities will follow suit later. Typically, gold will be the first one to really run, and that's that's my belief. And all the commercial banks are essentially middlemen with a bunch of greedy traders at desks who make bonuses by ramping and spoofing the markets. And yes, the DOJ is going after these guys. The head of J.P. Morgan's desk, Michael Nowak, allegedly did this for 10 years, and he had a whole team of dudes doing this who have select few have already admitted to doing this. So those guys are just like the middlemen, managers of this operation. But my hunch is that foreign central banks are, at the directive of U.S. Treasury, are doing this on behalf of U.S. Treasury. And U.S. Treasury could also do this too. They use right now they're using the Gold Reserve Act as a way to just go ahead and use the Federal Reserve and 10x and do these special purpose vehicles and go out and rig markets and prop the markets. So there's a lot more going on, I think, than most people could even guess, and nor I. I mean, I look at these markets and it just looks like you could do anything in these markets if you're the powers that be. And ultimately, I do think the powers that be want to turn this monetary system and light it on fire later this decade and have it go out in a highly inflationary manner.
Yeah, I think that might be the plan as well, and obviously I'm very concerned about it, which is why I suggest people get into tangible assets. And right now, in my view, silver in physical form is the world's most undervalued tangible asset. So when we think about what's going on at the LBMA and the COMEX, did you say that the COMEX claims they have, 350 million ounces of physical silver in the warehouse?
That's correct. And then on the gold side, I was looking at it today. It ballooned in the last 4 months, but I think they claim on the gold side 34 million, of which 4 million are roughly these 400-ounce gold bars, which no one wants. I looked at the 4GC contract. There's not one contract being traded right now, so something's up. They did that for some other reason, and we'll probably find out sooner or later.
Well, here's what I'm driving at. So I don't believe for 1 second that the COMEX has 350 million ounces of physical silver in some magical warehouse. By the way, do you know where these warehouses are? Are they in New York City? Where are the COMEX warehouses? Yeah. Chicago?
Yeah, the COMEX warehouses range from anywhere from New York, Delaware, Massachusetts, pretty much all East Coast.
Okay, here's what I'm thinking. In a perfect world, we could get cameras on these warehouses to see these trucks coming in and coming out every day, because none of this adds up. Right. We're told, well, actually, in one of your recent videos, you pointed out that 200 million ounces of physical silver, well, I can't say physical, but 200 million ounces of silver just went into ETFs in the last 4 months. We're talking about gargantuan amounts of silver, guys, when there's only 800 million ounces a year being pulled out of the ground. Let's get back to COMEX silver stop contracts. You recently said that 68 million ounces of deliverable silver is on the books for this month. Is that accurate?
That's correct, yeah.
Okay, so if people stood for delivery, we would be able to see these trucks moving with, well, look, let me show this picture, guys. This is a picture from one of James' recent videos. It represents approximately 5 million ounces of physical silver. Now imagine, where are they keeping 350 million ounces? And imagine if people stand for delivery for 68 million ounces of silver this month. Let's just sit back and videotape these trucks leaving the COMEX. It's never going to happen. So you jump in on that, James, if you have anything to say.
Yeah, so it's really hard to wrap your mind around 200 million ounces trading that quickly and moving that fast into ETF warehouses. Where's all this silver coming from? The main bet is that it's coming out of JP Morgan. JP Morgan for 10 years pretty much exploded their COMEX warehouse size from 0 to 160 million ounces. We don't know how much of those 160 million ounces are house JP Morgan versus clients of JP Morgan. I've seen the house versus client, contract percentages. Typically, it looks like 60% of it has been house contracts, 40% client, but that doesn't necessarily mean that that's exactly what the amount is in that warehouse. But on the other side, on the London side, I mean, they are the custodian for the largest silver ETF in the world, which essentially is like the wolf checking out the hen house. The wolf occasionally pulls out 1,000-ounce silver bars when it suits them, and they go and stick it in some other vault somewhere. And so over the last 10 years, JP Morgan has been able to pull out, I would imagine, hundreds of millions of ounces of silver from the ETF, SLB. And so my guess is that they're probably leasing this silver back. I think Ted Butler's written about this, and it's probably correct. They're probably leasing, if the silver is actually going into these ETFs. And remember, JP Morgan's silver ETF, they're the custodian of SLV. They likely have a pile of silver that's theirs next to the pile that's supposed to be SLV's. Lord knows who's double counting what, et cetera. But maybe they're leasing it back to the SLV at exorbitant high lease rates. My guess is that maybe what they're doing. But it's a tremendous amount of silver, Sean, and in 4 months you have a fourth of all new line silver going into 6 or so silver ETFs. I think the highest ever we had in silver in terms of investment demand was in 2015. 1/4 of all new line silver, of all silver that year, went into bullion products. And so we've already reached that level pretty much this year. And we're just past the halfway mark. So who knows in the second half how much more demand is going to be coming out of the ETFs and or on the physical side.
All right. So let's think about this. If we're to believe that let's just say there's 5 billion ounces of physical silver in the possession of people, silverware, stackers, JP Morgan, stash, etc. Let's just pretend that there is still 5 billion ounces of physical silver on planet Earth at $20 an ounce. That is what? $100 billion of silver. Meanwhile, we live in a world where Tesla is currently trading at $1,500 per share with a $278 billion market cap, my friends. $278 billion market cap. Tesla is now worth more than General Motors, Ford, and Fiat Chrysler combined. And when this was written on June 10th, 2020, it was worth more than Toyota, Volkswagen Group, Honda, and Daimler with a market cap valued at $185 billion. Again, now Tesla has a $278 billion market cap. This is the madness of a lost economic system. That's what this is, guys. And JP Morgan has a silver stockpile in physical of around 160.74 million ounces. Now, in your last video, James, you dissected John Dizzard's, Financial Times John Dizzard's hit piece on silver titled "Don't Bet on Silver Boom." And I think you did a fantastic job. And in that piece, you also played a quote from Jeff Christian, because John Dizzard wanted to do a hit piece. He quoted Jeff Christian saying silver will trade between 16 and 20, pretty much in perpetuity, to which you responded with this soundbite.
So we spend a lot of time looking at the global economic outlook and political outlook, and also the stability of the global and regional financial market. And when we go forward, we expect gold and silver prices to rise sharply between now and, say, 2024, probably to record prices by 2022, 2024.
I'm going to pause it right there. Jeff Christian, record prices for silver and gold by 2022 to 2024. Guys, silver's at 19. What is the record price, James? 50?
Yeah, 50, depending on where you go. But 50 has been the price high that happened in 1980 and in 2011, essentially.
All right, so there's Jeff Christian in his own words. So you nicely debunked John Dizzard's Financial Times hit piece. And I just think it needs to be said that the powers that be, or the powers that ought not be, don't want people buying physical silver, which is why guys like John Dizzard do hit pieces like that. And it's just so transparent. It's so weak. Yeah. It's so easily debunked, and you did a great job doing that in this video that you posted on July 10th. Don't bet on the silver boom by John Dizzard. Your reply.
Yeah, it was fun to have some fun with John Dizzard. I mean, the guy obviously was going after silver because I don't think people in London want physical demand for silver spiking like it is right now. I think they really want to squash it, and it's not going to happen. I mean, I basically said to him, like, look, first of all, stop citing CPM Group, because the guy's on record. The record's coming in the price of silver and gold. That clip that you just heard, that's from Financial Sense NewsHour, I think in 2018. So that's well before any of this COVID stuff. I mean, if you ask Jeffrey Christian now, he'd probably still say that. 2022, 2024, there's going to be some deflationary stuff from here to there and some spike in dive, et cetera. But the monetary investment demand for silver, that's what drives it. That's what makes it go berserk. If that's what happened in 2010, after the 2008 financial crisis, we had QE1 jumping from a $9 spot in silver all the way up to $50 by the first third of 2011. That's a 5-bagger in silver price, and that was led by QE1 and QE2. Here we have infinite QE, okay? And we've already run up from 12 to 19, but this is just the start. I mean, we have to break 25, and then running from 25 to 50 probably will happen fast, because that's by the time I believe that they've kind of let the system go. I think by that time, the financial powers that be are looking to really devalue nominally U.S. dollar and in the coming decades, because they cannot deliver in value what they have promised. Not just the government, but also other people in terms of people who worked and have pensions and stuff that are totally underfunded. Those have to be net nominally. And my guess is they're going to try and drive both the stock market up nominally and commodities going to raise up nominally. And commodities in that environment typically do best. And precious metals typically in that environment outperform everything. I have interviewed Jeffrey Christian multiple times, once about the Hunt brothers, how little they had to do with the 1980 spike. And then I also interviewed him about prudent positioning with Bullion and all the studies he's done. And when it comes down to it, basically he did this really long-term study of almost 50 years. And it came to a point where it said, gold, a position of 25% in the last 50 years in your portfolio of just straight up gold bullion versus S&P 500 and IOUs like bonds and T-bills, et cetera. 25% gold bullion was the best percentage to have in your portfolio over the last 50 years on a risk-reward basis. So those are the two things that I wanted to get at him when I interviewed him, and I did. But that clip that you played, it's very powerful, Sean. I mean, it's coming, and even the apologist of the system is telling you it's coming.
Yeah, that's what I want people to understand. I recently replied to a tweet. Somebody had asked me something about precious metals, and I said, I firmly believe that people in the near future will be looking back today, at today's date, in silver at $19 an ounce, and saying woulda, coulda, shoulda. All right, so that's the reason for this call, guys. All right, sort of the final question I had for you. You mentioned in your last video, and I think it's important, Credit Suisse shut down their 3 times leverage silver long recently. Why do you suppose that is?
Well, I mean, if you talk to most industry professionals who manage these leveraged long ETNs, what they're called exchange traded notes, they look at them as being hazardous, things that explode. A lot of times they'll use it for various trades, like for instance, when there's a lot of I'm forgetting the word. It's when there's a lot of volatility. They have triple volatility ETNs that have exploded and gone to zero valuation just in the last year or two, because for a long time the market was totally placid, and so all these people were writing bets saying it will stay placid, and the bet went wrong, and the ETN exploded in their face. And my bet is Credit Suisse canceled their 3x long silver ETN because they know if they kept it up, silver would have gapped up, doubled, tripled in a short time frame, and they would have had their ETN explode in their face. And so my guess is they made a lot of money in the last whatever years that they had this silver triple X long ETN, because a lot of the bulls on the retail side were probably buying silver 3x long ETN thinking that it was going to happen tomorrow, and it didn't. And so my guess is they probably shaved and took a lot of profits from those retail bulls that have been hoping and waiting for silver to explode. But now we have infinite QE, and so now we're on the cusp of this. And my guess is the next time that the Federal Reserve has to come in and park another $3 trillion obvious on their balance sheet, it's going to be obvious to everyone that they're going for inflation and that they're going to debase the dollar to hell.
Yeah. Okay, something else just jumped into my head, and I wanted to Google it quick just to remind myself and then ask you. I think this is another example of how there's smoke coming from the COMEX, and not even these big banks want any part of it anymore. Scotiabank trying to get out of their metals business. Do you want to talk briefly about that and why you think that's happening?
Yeah, sure. You have Scotiabank who's trying to back out of the metals business. I think they're trying to completely withdraw by the end of this year. There was reports of HSBC losing $200 million or more on one day of trading. What we have right now is a big discrepancy that's happening between the London price, which is usually banks and players that are trading on a one-to-one basis, versus the COMEX, which is a huge exchange that supposedly is more transparent. There's a big divergence, a big difference right now between the price of gold in London and the price of gold on the COMEX in New York or in the United States. And the same is true now for the silver price. And what's happening here is historic. It really has not happened for the last 40 years or so, these massive gap outs. And what it's telling you is that these markets are no longer working together like they have, and something's up, something big is happening. And when you look at the COMEX and just the amount of stop contracts, it looks like a lot of the trades that were happening in London are now happening on the COMEX because of the difference in discrepancy in prices. So there's people who can make money on the arbitrage. And then the other question is, okay, well, how much of this metal is going to start getting sucked out of that warehouse system? And that remains to be seen. My bet is that in the coming year or two, you're going to start seeing high net worth, not only high net worth investors, high net worth people who manage money for people, hedge funds, et cetera. Once gold clears $2,000 an ounce, these people were really scared. They don't want to make bets and then have it go wrong and then get fired and lose their career. Okay. So they need to know for sure that the momentum trade is on, and the momentum trade in fiat Fed note gold, when it passes $2,000 an ounce, that's my expectation, is that you're going to have these guys, this cowardly management, money management crowd. They're going to start powering into not only gold and the COMEX, they're going to go into ETFs, they're going to go into miners, et cetera. And that's going to lift all boats. It's going to lift all boats in gold, and it's going to lift boats in silver certainly too, because silver is just the alphabet on gold. I mean, you have billionaires like Scott Minerd out there who's, the guy is right now, he's the name in the bond market. He's basically the king of the bond market. He's one of the most shrewd guys in the bond market. And that guy in 2011, when silver was around 32, was telling Fox Business News by 2030 you could have $500 silver, because the market, it's just, the monetary system is going to be changing, and people are not going to accept fiat Federal Reserve notes in the form that they're in at this point. So essentially, you're going to have silver have an exponential price rise. And this year in 2020, he's doubled down on that claim. I believe on Bloomberg, he said that it expects silver to go exponential, essentially like palladium has in the last few years. And that's I totally agree with that guy, and I think he's one of the smartest dudes out there. So Scott Minerd is someone who should keep an eye on, because he's a big silver bull too.
Yeah, I've played that clip. I think that might have been at Davos this year. He was asked, what is your top pick, your top play for 2020? And he said, silver. Just that matter-of-factly. And they're like, silver, really? And he explained why. So that is a very powerful clip. Maybe I can find it and play it here.
Before you go, we need a conviction trade. Big calls, made a lot of headlines.
Right.
Where do you put your money? What's the number one conviction trade right now for you, 2020?
Silver.
Silver?
Silver. No.
All right, so let's just round out the conversation by letting people know what you guys do over there at SD Bullion. I think you guys offer the best premiums in the business, and I'm seeing premiums come down. What was I seeing here earlier today? Silver Kangaroos, where did those go? Silver Kangaroos from the Perth Mint as low as $255 over spot. I think that's a great deal. I bought some silver Cougarans from you guys recently, and those were very reasonable too. So maybe premiums are coming down a little bit finally?
Yeah, mints are starting to react because the COVID crisis has kind of passed. They can actually get to work full time cranking out coinage. So what we're having is a lot of new coins are coming to the market. So whether it be kookaburras or stuff from the Perth Mint, even the U.S. Mint's still kind of behind. So the American Silver Eagle is a little bit gapped out because they just are not delivering enough for the demand. And so it's very, very difficult to get it at a price point that makes sense for people. But other products like 10-ounce bars, rounds, et cetera, they've all been slimming down closer. And one thing about silver to remember is, like, when you look at the historic track record, when it runs, for it to gap up 20%, 30%, that can happen in a week's time. A week of good trading, silver can jump that high, that fast. It can also go down that fast. So it goes both ways very, very quickly. So for people who are placing a long-term bet at 19, I think they'll be very, very happy 5 to 10 years from now that they did that.
Well, I agree. And again, I just would really advise people to go over and subscribe to SD Bullion on YouTube. You're going to get at least once weekly updates from James Anderson. And frankly, James, I'd put you right up there with Ted Butler. And Bix Weir does a nice job too, so shout out to Bix. But I put you right up there with some of the best people in the business talking about this stuff and breaking it down. So I really do appreciate your voice and perspective.
Thank you so much, Sean. Thanks to listeners out there who have interest in this. And yeah, come by to the YouTube channel, subscribe, see if you like it, stick around, and check out our website. SD Bullion, I believe, is one of the top retailers of bullion in the United States. So come check our products out and see if you like them.
All right, very good. And guys, I said it once, I'll say it again. We now live in a world where Tesla, which just this year became profitable to some degree, is trading at $1,500 per share with a $278 billion market cap, which makes that company almost 3 times more valuable than all of the physical silver on planet Earth. That's how undervalued silver is, in my view. Our guest has been James Anderson from SD Bullion, sdbullion.com. Thanks, James.
Thank you, Sean. Appreciate it.
My pleasure. And guys, thank you so much for tuning in. If you're still with us, hey, give this a like. Help us break those YouTube crooked algos, and let's get this information out. And if you guys want to buy physical silver or gold, I will leave the link to SD Bullion below. I don't get any commissions from them or anything like that, guys. They're just a trusted sponsor and have been for a very long time of SGTReport.com, where you guys can also go for real news, the antidote to corporate propaganda and Mockingbird mainstream media lies 24/7. God bless you guys. We love you. Hang in there. We're going to get through this. We're all in this mess together, and hopefully we'll come out on the other side with sovereignty, liberty, and justice for all. We love you. Thanks for listening. Bye-bye.
It seems to be a thing in Latin America, mocking Jesus Christ, his crucifixion. So you see a lot of memes showing Jesus Christ like on the crucifix, like in sexual positions, just total, like, if you're Christian, it'd be, complete blasphemy. And all those memes were allowed.
I bet they wouldn't allow that for Muhammad.